welcome back to the Stock Estate everyone, where we learn how to swing trade with risk management. So before I start the video, I'm just going to ask you one question. Do you think that a swing trade would actually work out, if the overall market is good or the overall market is bad? 3 seconds. 3, 2, 1. Okay, the answer is, when we are doing swing trades, right? Especially if you're excluding, buying put options, we are shorting the market, we're just looking at buying into stocks and hoping it going higher. It is always better for the market to be in a bullish run, okay? For the market to be on the green as well as being in a high and strong trend going upwards. Okay, when the market's in a correction or a pullback, most of the time the swing trades will have a higher chance of going down as well. So as swing traders, right, the good swing traders will just look at the charts itself, but the astute or the very, very good swing traders, right, which is us, the astute swing traders, we want to look for the overall market conditions as well as the macroeconomic factors. Okay, so we take into account a lot of things because many, many things can influence our swing trades. So we do want to cover our grounds pretty well. So firstly, let's talk about overall markets. Okay, we know that overall markets will definitely pull back. And today's video, I'm just gonna inform you guys, okay, and educate you guys a little bit more and teach you guys a little bit more how to identify, signs that the market, might pull back soon. Okay, as I said, this is not a prediction channel. I can't really predict when the market will pull back. Okay, I'm not a guru like that. But what we can do is we can look at the signs and we can start prepping, for a pullback. And how to prep and how to look for the signs, I will teach you all in today's tutorial, in today's Stock Estate Academy video. Okay, and this video will be part of the tutorial section of my playlist, so you can go through there, and learn some stuff, whenever you are free. Okay, and if you really like my content, smash the like button and subscribe to my channel for more tutorials like this, as well as my top 3 swing trade stocks every week. So without further ado, let's jump straight into the video, everyone. So firstly, when we look at the overall markets, right, first we're going to look at the infographics over here. Okay, it's looking at how do we prepare for the overall market pullback and market life cycle. Okay, first we're going to look at the overall major indexes. Okay, find one that's relevant and identify whether it's an anomaly. Okay, so I understand that my viewers might come from major everywhere in the world. Okay, and you might play different markets in the world. So I'm not quite sure. But for me personally, I specialize in the US market. So a lot of my swing trade videos and my stocks that I play is in the US markets. But I recognize that we could play a lot of the other markets as well. So we first want to look at the overall world, okay, the markets, how is it like? Okay, so we can look at this, I use this site over here. Okay, it's called Market Time In and Out. Okay, so what we can look at over here, right, is that S&P in a high trend, okay, Dow is in a high trend, Nasdaq is in a high trend, Nasdaq 100 is in a high trend, Russell is in a high trend, Russell Micro is in a high trend. Most of them are in a high trend, except for FTSE, okay, is going down a little bit, and the trend is actually weakening a little bit, okay. Most of them is in a high trend, except for FTSE as well as Crsr, which is Malaysia, okay, the Malaysian stock market, okay, which is currently on a downtrend actually, but they started to hit the bottom. So, if you are one person who are very astute, and very strong, in playing multiple markets and are very, very good at playing multiple markets, one way you can do is actually, play in between market, diversify your portfolio. So you might want to take off some in the trending markets and put in some in the non-trending markets, so the one that's reaching a bottom and might explode up in the future. So that's how you play between markets. And honestly, this is a good way to do that as well. But however, I don't want to overcomplicate things, okay? And I want to stick to only the US markets for my context. So let's jump into it. So for me, the relevant ones are the S&P as well as Nasdaq. I don't really play a lot of companies in the Dow. So Nasdaq and S&P is what I'm looking for, okay? And you can look at over here, right? If I'm going a little bit closer, right? Okay, we can see over here, okay, the S&P, right? S&P is on an uptrend, and there's something called the advance and decline line, okay? So advance and decline line is basically it is the amount of companies which is advanced, right? The amount of companies that has increased in stock price compared to the amount of companies that's declining, okay? The amount of companies that have dropped in stock price over the coming days, okay? And the more companies has been going up divided by the company has been going down a smaller number, right? Then basically the advanced line will be going higher and higher. So if the lines going higher and higher, that means more companies are actually increasing in price versus the amount of company that's actually decreasing in price. Okay, if you still don't understand what I just said, right? Okay, I can either replay the video or I can go to Google, okay, and go type in advanced decline line. Okay, what is it all about? Okay, so basically what we can see over here, the signal line, right, the advanced decline line has been going in an uptrend. That means it's trending, it's very good, trending high, okay? Very, very bullish market ahead, which is very good for swing trading itself. And let's take a look. Okay, so we have the overall two markets. We identified that is a very strong momentum upwards. Now, we jump into the second step, okay, which is to read the technical charts itself, okay? And you know, I have all my swing trade tutorials, from my trending swing trade tutorial, my overreaction play, my trend reversal play. All of these, right, are actually beautiful. And why do I say it's beautiful? Because it doesn't just apply to swing trading. Okay, it applies to day trading as well. Okay, if you want to use it for day trading, you can do that as well. Okay, you can use my market indicators and how I look at things, right, and play a day trade. Or you can use it to apply to the overall markets as well. Okay, so that's how beautiful it is. But for me personally, I like to do swing trading itself because I personally don't have the time to play a day trade because in my time zone over here, I'm actually sleeping, you know, when most of the markets open. So I'm actually here for a short trade itself. Okay, so personally, I'm invested more in the S&P 500 as well as the NASDAQ companies. So these two are the major indexes that will actually affect my swing trades. So let's take a look at first the S&P 500. Okay, we can first look at the both NASDAQ, right, and S&P 500. Both of them have very, very similar looking charts. You can see that for S&P 500, it has been trending quite a little bit. For the NASDAQ, it has also been trending quite a bit. So let's take a look at the S&P 500 as a nice gauge because I feel that it's one of the more balanced indexes out there. So let me just give you a nice little breakdown. Okay, there's three kinds of pullbacks that exist. Okay, within a market cycle or a market pullback. Okay, so first kind, okay, it's a minor correction. Okay, to the 20 moving average. Second is a more heavier correction or midterm correction to the 50 moving averages, okay, with 50 moving average around here. So the first one is to the 20 moving average, second one is to the 50 moving average, and the last kind is a more serious pullback, or I'd say a major correction to the 50 moving average around here. If you can take a look, it's over here. Okay, let me take out my doodle and let me draw it out for you guys. Okay, to the 50 or the 200 or the 100 moving average over here. This is a more major pullback right here. Okay, you can see that there's twice that it has happened. Okay, one in September, then another time in November. Okay, and the last kind, okay, the fourth kind, which is the rare, but it happens once in a while. And it's something that a lot of YouTubers always like to clickbait people with. Okay, market crash. Okay, market crash is one that transcends all three boundaries: the 20 moving average, the 50 moving average, as well as the 100 moving average, and breaks down below that. Okay, and we can see that right clearly, very clearly in the March crash right here. Okay, in the March crash right here. Okay, transcended. Okay, one time, twice, and thrice. Okay, you can see it broke. Firstly, it broke the 20 moving average, then it broke the 50 moving average, then it broke the 100 moving average. Okay, so for just for clarity's sake, right? Okay, the yellow line is a 20 moving average, the purple line is a 50 moving average, and the green line is a 100 moving average. Okay, so this three lines signifies like a trend. Okay, and when the price action trades above all three of these lines, it represents a very, very strong trend. But when it trades below all three of these lines, that means something bad is not really is kind of happening here. Okay, it's not really a good sign. So this is a crash. Okay, once it breaks past this level, boom, all the way to its rock bottom. Okay, the lowest, insane drop. Okay, crazy. Okay, so March crash, that's a market crash. Okay, otherwise after it pulled back, right, it recovered, right? Okay, so let me just clear my drawings again. Let me just bring back the charts again. Okay, you can see that. Okay, there is two very serious corrections. Okay, which is here and here. Okay, once in October, once in November. Then there is one time that it actually corrected itself towards the 50 moving average, okay, which is here, the purple line. Okay, once in February. Okay, it corrected itself past here. Okay, otherwise, most of the time we can see that historically, right, this market for the past around 10 months or so, okay, 10 months or so, have been heavily respecting this 20 moving average over here, right? Okay, it has always bounced once and twice and thrice. So most of the time, right, it is respecting this area, as you can see over here. So we are trying to make a comparison, or we are drawing a conclusion from this. Okay, so you can see that it touches once here over here, touches twice over here, pull back to the 20 moving average thrice, 4 times. Here is a major pullback. Then we don't know yet. Okay, we don't know yet. 1, 2, 3, 4, major pullback. 1, 2, 3, 4. So, and always you can see that it has always been going on for 1, 2, 3, 4, 5 candles. Okay, 4, 5 candles before pulling back, 4, 5 candles before pulling back, 4, 5 candles before pulling back. And this time, the market has actually overextended quite a little bit. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9 above. And you can see that when it always touches this moving average, right? It respects this moving average quite heavily. And whenever it pulls back, it tends to pull back over at this area over here. And so, again, now we are going to read the technical chart again. So this is what I mean by reading the technical charts. First, I'm identifying what kind of chart it is. Is it a bottoming out market that is coming back up again from a trend? Or is it a trending market that's respecting a moving average? And this market right here, right, is a trending market which is respecting a moving average, okay, with occasional pullbacks deeper than the 20 moving average, which I pointed around here. So now we identified that, right? Now, what I want to do is you want to identify the top roughly, okay, and an area that you want to buy back in. Okay, how is this significant? Okay, because this, as I said, the beauty of reading this, right, is you can apply it not just to swing trades, you can apply it to day trades as well, you can apply it to your long-term investments as well, longer-term investments as well. Okay, so sometimes, right, we don't want our longer-term investments, right, to, sustain a huge pullback, and see all our open profits go to waste. Sometimes it's good to rebalance your portfolio every now and then. When your original investment has grown so much, right? Rebalancing portfolio, what does it mean? Right? As an ex-financial advisor, what I do is I will rebalance portfolios, and it's very important to do that because when your certain amount of a portfolio or a certain stock that consists maybe like 20% of a portfolio has increased so much, right, that it has gone to 30%, 40%, that means it engulfs your portfolio. Maybe sometimes it's good to take some off the table to allocate into other kinds of assets, to rebalance out the portfolio, because you do not want one asset to be overpowering your entire portfolio itself. So although it's a long-term investment, and I do encourage for long-term investment wise to hold and dollar cost average down, but when some asset grows too fast, too strong, too fast, you might want to take some off the table, especially when you can foresee or you can think that a market pullback is going to come very, very soon. Okay, we all don't like market pullbacks, but honestly, we must embrace that it comes once in a while. And the key here is not to predict, but you must be prepared for it. Okay, not to predict, but to prepare. Okay, so let's take a look. Okay, so after looking at technical charts, we want to identify the top. Okay, so how do we identify the top? Okay, so I use this thing called the 2 standard deviation Bollinger Band, okay, which is this yellow little snaking looking thing over here, right? So most of the time, the charts will respect this 2 standard deviation Bollinger Band. That means it will trade within this 2 standard deviation, this area over here. You can see this yellow area over here. But any point of time, right, where it trades out of this range, right, it will quickly reverse back down most of the time. Okay, and you can see that, right, in a lot of like my stocks, such as you might look at my previous videos, such as my top 3 swing trade stocks video, right? A lot of times I've actually mentioned that when it can actually trade out of this. Okay, you can trade out of this, but quickly, most of the time, you actually reverse back into the Bollinger Band itself most of the time. So again, as you can see, this market, right, as S&P 500, of course, it's an overall index. Most of the time, there won't be any super major violent swings that the entire index will be up 10%. If it does, right, then I'll be actually quite worried, because that means the entire market and all 500 companies on average rose 10% on average. That is quite crazy. Okay, so it doesn't make sense. Most of the time, the market doesn't really go that much. So it actually trades within the Bollinger Band pretty closely, except for this a few times over here, right? You can see it comes out a little bit, but it goes back down pretty quickly in a couple of days. Okay, and all these candles is in 1 day mode. That means 1 day it paints 1 candle. So right now, you can see that this, right, okay, at this point of time, it actually hits the top over here at a Bollinger Band over here, right? So at this point, you can start to think, should I actually prepare for a pullback soon? Okay, you can start to rebalance your portfolio. No need to sell. I'm not asking you to sell everything. Okay, this is not a financial advice or to ask you to sell all your stocks. It's gonna pull back. It's definitely gonna pull back. As you can see over here, it did not pull back. Okay, and when a market consolidates over here, right, you can see it consolidates. Let me just zoom in. It consolidates, right? That Bollinger Band actually, you will extend further, and it gives it more room to run. Okay, it just there's some mathematical factors over here where when it consolidates, the Bollinger Band expands, but I won't bore you with the mathematical details. Okay, but this basically, when it consolidates, there's more room for it to run. Okay, so we can see, right, but it's reaching still again. It's trading very, very closely to near the top of the Bollinger Band. Okay, and you can see maybe Monday, right, it will go up higher a little bit. If it breaks up higher a little bit, it will reach really the top. And then on, right, I can foresee, that there might be a mini pullback, okay, Okay, let me draw the imaginary 20 moving average. This is the 50 moving average, and this is the 100 moving average, right? I can see it, pulling back slowly, one over here. Pardon my candles. My candles are disgusting, but okay. Okay, it'll pull back slowly. Okay, most likely, this is what I'm thinking, right? But it might not happen because I'm not a guru, I'm not a wizard, okay? But it will bounce off the 20 moving average and go back up again. 1, 2, 3, then yada, and go. Okay, or other scenario, it can break down further and touch the 50 moving average to a medium-sized correction, or worst case, okay, it will be a very heavy correction to the 50 moving average, okay, which we do not really want, okay, but we must always be prepared for the worst that can happen, right? So again, okay, this is how you identify the top, okay, and this is for you to rebalance your portfolio. And fourth, okay, once you can identify, right, you need to ask yourself and you need to look at yourself, okay, in the face, but you must think, okay, how much am I currently invested in the current markets? Okay, if your answer is right, I'm 100% invested, right? Like full on cash in, everything in, right? Then first, you need to watch my video on how to prepare for a market crash, which I give you a small breakdown over here. Is you need to have some cash on hand. Always have some cash on hand in case of a market crash, especially when markets are trading at all-time highs right now. Okay, that's the first thing you need to do. But if you're 100% or a lot of your swing trade portfolio is okay, let's give you an hypothetical example. Okay, you have $100,000, right? Then you allocated $20,000 to your swing trade portfolio, and all 20% of your swing trade portfolio is in this market right now. You should take some off the table, okay? Or at least what I would do is I will take some off the table, okay? I'll lock in some profits, especially those stocks, right, or swing trades that I'm using as a trending play or a wedge play or whatever play that I'm using, right? And I'm up like 30%, 40%, 50%, okay? So much profits already, right? Okay, so many times it has happened to me. Okay, I sometimes in the past, right, sometimes I forget to check the overall markets and they pull back, and those are the companies, right? Those trending companies or the trending stocks, right, are the ones that get hit the hardest. Okay, I see my open profits from 50% drops to around 21%, 15%. Not very nice feeling. Okay, my I could have gotten so much more gains, and it's not a nice feeling to see your open profits just go to waste. Okay, so the longer you let your open profits ride, right, the higher chance of a reversal or overall market pullback, and it will go to shit. Okay, so you need to take some profits. Okay, you don't need to close the entire position. That means you have 1,000 invested in this, right? You don't have to sell the entire $1,000 worth. You maybe can take half profits. Okay, let it ride out just in case it doesn't play out. The market can continue to run for a few more days. Take half profits and use that profit. So either you keep it in cash, or you can reinvest in certain securities, right, or certain swing trades, right, that are more defensive in nature. Okay, actually I'll be making a video, okay, probably sometime soon. Okay, you're probably in my tutorial playlist, same as this video, and that video will be talking about the different kinds of swing trade play, right, to play when the market is in the uptrend or when the market's in a pullback. Okay, so some plays are better when the market's in a pullback, some plays are better when the market's in an uptrend. Okay, so I'll make a video on that, and you do check it out if you have the time when you do so. Okay, so right now, right, okay, take some off the table, rebalance your portfolio, take some profits if you need, and take advantage of the deals that can come ahead, in the future. So yeah, that's it for today's video. I hope you guys enjoyed this pretty short video, but I would say it's a much needed video, because swing traders, right, to reiterate, okay, our swing trades can only go so well if the overall market is supporting, our trades itself. Okay, so let me give you an example, right? Let me just go to an open area over here, right? Okay, so if, example, we are playing a wedge play, right? A wedge play, right? Then the is trading in and out, in and out, in and out. Okay. If the overall market is giving down pressure, okay, higher chance that you will break to the downside and trigger all the stop losses over here, and you will lose. You have a losing trade. So, but if a market is in an uptrend, right, it's an uptrend, very strong pressure to push the price all the way up, so that you will break the wedge out in the right way. Same goes for every single other play out there. So again, overall market conditions, you cannot neglect. Okay, you must always keep up to date, here and then. Okay, and if you follow my discussion page, right? Okay, if you follow, okay, I have a discussion chat page over here. Okay, I do post sometimes like what I feel about the overall market. Like example, 2 days ago I said the overall market looks extended, might be a good time to lock in some profits. And right after I posted this, okay, the day after and the day after that, Thursday and Friday, the market actually was a kind of red. Okay, and a lot of the companies, right, and the stocks, right, will actually pull back massively. Okay, like ACB and stuff, those trending stocks, right, will actually pull back more heavily with the overall markets. Yeah, so I hope you guys enjoyed today's video, okay, and smash the thumbs up button if you really like this kind of content, and subscribe to the channel for more tutorial tips like this, and I shall see you in the next tutorial, my fellow stockestators. Stockestaters.